The Golden Standard Podcast, brought to you by WeSellSilverAndGold.com. Connect with us online to buy gold and silver at cost, or start your own journey into gold and silver as a business and wealth generator by calling 682-238-1557. All right, we're diving right in, ready to uncover some exciting developments in precious metals and the global economy. Today, we're zeroing in on the recent surge in silver prices, and trust me, the factors behind this upswing are absolutely captivating.
The Golden Standard Podcast, brought to you by WeSellSilverAndGold.com. Connect with us online to buy gold and silver at cost, or start your own journey into gold and silver as a business and wealth generator by calling 682-238-1557.
Yeah, you've brought some fascinating insights to the table. We've got this report from FX Street highlighting silver's impressive leap to almost $34, fueled by some serious global shifts, particularly those new U.S. auto tariffs. And we can't forget that quick hit from Kitco News showing gold flexing its muscle above $3,050 while U.S. jobless claims are actually dropping. So we've got a lot to unpack here. Our mission today is to connect these dots and really understand why silver is on the move and what it all means for the bigger picture.
Absolutely. Let's break it down.
All right, so silver pushing towards $34, that's a headline grabber. What's the immediate spark behind this upward climb?
Well, the FX Street analysis points to a pretty direct connection. U.S. President Trump's recent announcement of a brand new 25% tariff on cars coming into the U.S.
Wow, 25%. It's a pretty hefty tariff.
Yeah, and it's not some distant future thing either. These tariffs are set to take effect and start getting collected in early April.
And these aren't just minor adjustments, right? The article really emphasizes that these tariffs are, and I quote, permanent. That's a big deal, and it could have some serious long-term consequences. The article even names some big players, Mexico, Canada, Japan, South Korea, and Germany as the top auto exporters to the U.S. back in 2022. Gives you a sense of the scale here.
Precisely. This kind of move, this decisive action, it immediately injects a significant level of uncertainty into the global economic outlook. And what's particularly interesting is that silver tends to perform better. It really shines when there's this kind of heightened economic uncertainty. It's often seen as a safe haven asset.
It's a safe haven, yeah.
Yeah.
Like a port in a storm. When things get rough, investors flock to assets that hold their value, and silver has historically been one of those go-to assets.
Exactly.
Okay, now here's where it gets really interesting for our listeners. These tariffs, on the surface, they seem aimed at those foreign car manufacturers. But it doesn't just stop at the border, does it?
Yeah.
There's a real potential for a ripple effect right here in the U.S.
You're absolutely right. The FX Street piece smartly points out that U.S. automakers might feel the pressure, the need to ramp up their domestic manufacturing in response to these tariffs. Now, that might sound good on the surface, more jobs here in the U.S., but we have to consider the higher labor costs typically associated with manufacturing in the U.S.
Right, labor costs are definitely a factor.
And this could very well translate to increased costs for producing those cars, which ultimately leads to, you guessed it, higher prices for consumers. And unfortunately, that means a decrease in the purchasing power of U.S. households. And this potential weakening of the domestic economic outlook, it also tends to put downward pressure on the U.S. dollar.
Okay, so let me make sure I've got this straight. These tariffs, designed to protect the U.S. industry, could actually end up weakening the dollar. And since commodities like silver are often priced in dollars, a weaker dollar makes them relatively cheaper for buyers using other currencies, which could potentially drive up demand and therefore the price of silver. It's a fascinating dynamic, a bit counterintuitive, but really interesting.
That's a great summary. If we zoom out a bit, you can think of tariffs as essentially making imported goods more expensive. When those costs go up, businesses and consumers start to feel the pinch, leading to broader concerns about economic growth and stability. And in those moments of perceived instability, investors tend to look for assets that are seen as having, intrinsic value, things that are expected to hold up well. And precious metals like silver certainly fit that description.
Makes sense. Now, the FX Street analysis also dives into some of the technical aspects, what the charts are telling us. What should we be paying attention to there?
Right. The article highlights that silver is currently moving towards what's called the flat border of an ascending triangle chart pattern, which happens to be near the October 22 high of around $34.87. Now, I know charts can seem a bit intimidating, but think of an ascending triangle like a pressure cooker. The price keeps hitting a ceiling, but each time it drops, the low point is a bit higher than the previous one. This suggests that there's growing buying interest, and it could eventually lead to a significant upward break.
So even for those of us who aren't glued to the trading screens, what we're hearing is that the charts are hinting at some potential upward movement for silver.
Exactly. The article also points to the 20-day exponential moving average, currently around $33.20, as acting as a level of support. Basically, it's like a floor that the price has been bouncing off. And then there's the 14-day relative strength index, or RSI, which is rebounded above 60. That's often seen as a sign of renewed bullish momentum that the buying pressure is picking up steam again.
Interesting. And the article also reminds us that investors are keeping a close eye on the upcoming U.S. PCE inflation data. Why is that particular piece of data so important right now?
Well, that's crucial because the core PCE inflation is the Federal Reserve's preferred measure of inflation. And expectations about how quickly prices are rising can heavily influence the Fed's decisions about monetary policy, things like interest rate hikes or cuts. You see, higher than expected inflation could signal that the Fed might need to keep interest rates higher for longer to try to cool things down, which could potentially make non-yielding assets like silver less attractive compared to, say, interest-bearing investments. On the other hand, if inflation data comes in weaker than expected, it might suggest that the Fed could become more dovish, maybe even considering rate cuts down the line, which could be a positive sign for silver prices. So this inflation data really has the potential to either reinforce the current upward trend we're seeing in silver or introduce some volatility into the market.
So it's a bit of a waiting game to see how the inflation data plays out and how the Fed might react.
Exactly. It's something to watch closely.
Okay, now let's bring in that other piece of information you shared, the report from Kitco News about gold trading above $3,050 after U.S. jobless claims fell. How does what's happening with gold relate to this whole silver story?
Well, the FX Street piece actually addresses that very point, noting that silver prices tend to follow gold's lead. They often move in the same direction. This is largely because they're both seen as safe haven assets, places to go when economic storms are brewing.
Yeah, I've definitely noticed that they often seem to be in sync, gold and silver.
Right. So while the Kitco News report focuses on a different economic indicator, the number of people filing for unemployment benefits, the fact that gold is also showing strength really reinforces the overall positive sentiment towards precious metals right now. It suggests a broader trend of investors seeking a bit of shelter in these assets amidst all the economic uncertainties we've been discussing.
Okay, that makes sense. And the FX Street article also mentions something called the gold-silver ratio. Now, for our listeners who might not be familiar with this, it's simply the number of ounces of silver it would take to buy 1 ounce of gold at their current prices. And as the article points out, a historically high ratio could suggest that silver might be undervalued compared to gold, while a low ratio might indicate the opposite. It's a tool that some investors use to assess the relative value between these two precious metals. What I find particularly interesting is that this ratio isn't static. It fluctuates over time, and those shifts can sometimes precede notable price movements in either gold or silver. So keeping an eye on the gold-silver ratio can offer another layer of insight into the potential value of these assets.
That's an excellent point, and it highlights a key difference between gold and silver. Unlike gold, which is primarily viewed as a store of value, silver also has significant industrial applications. It's used in a wide range of products, from electronics and solar panels to medical equipment and water purification systems. So, while the current surge in silver prices seems largely driven by safe haven demand and that overall economic uncertainty, any shifts in industrial demand, whether increases due to, say, technological advancements or decreases due to economic slowdowns, could also play a role in shaping silver's price trajectory. This dual nature of silver as both a precious metal and an industrial commodity adds another layer of complexity to understanding its price movements compared to gold.
So it's not just about fear and uncertainty driving silver. It's also about actual real-world demand for its use in various industries.
Precisely.
Okay, so let's bring it all together for our listeners who are now armed with this wealth of knowledge. What are the key takeaways here?
Well, in a nutshell, we're seeing silver prices getting a significant boost from the current global economic uncertainty. And a major driver of that uncertainty is the introduction of those new U.S. trade tariffs. This uncertainty is contributing to a weakening of the U.S. dollar, which in turn makes dollar-denominated assets like silver more appealing to international buyers. And from a technical analysis perspective, we're seeing signals that suggest this upward momentum could continue, although, as we discussed, upcoming inflation data has the potential to introduce some volatility into the market. And the fact that gold is also performing well just reinforces this positive outlook for silver. It's a fascinating convergence of geopolitical events, economic policies, and overall market sentiment all coming together to create this movement we're seeing in silver.
It's amazing how interconnected all of these global economic forces are. and how a seemingly specific action, like imposing tariffs on automobiles, can have such far-reaching consequences, even impacting the prices of precious metals. It really underscores the importance of understanding these underlying dynamics, especially if you're considering precious metals as part of your investment strategy, or even if you're just curious about the broader economic picture.
It really does, and it all leads to a thought-provoking question for you, our listeners. As you consider these global economic shifts, the interplay between tariffs, currency valuations, inflation expectations, and even the technical signals in the market, how might this influence your own perspective on the role that precious metals could play in the current economic landscape, both as a potential safe haven for your assets and as a commodity with inherent industrial demand?
The Golden Standard Podcast brought to you by WeSellSilverAndGold.com. Connect with us online to buy gold and silver at cost or start your own journey into gold and silver as a business and wealth generator by calling 682-238-1557.